Markets slide off intraday highs after a disappointing Fed meeting. So, what's the takeaway? Well, at a high level, it was as expected. No change to rates, but the Fed is still forecasting two cuts by the end of the year. So, why were markets disappointed? Well, a few things. First, Powell made it clear that the recent inflation progress was not enough. He actually almost seemed to snap at one reporter, stressing forward looking data is more important than historicals for forecasts. Basically, markets have latched onto historical inflation data like CPI, PPI, and PCE as enough signal that inflation has regressed enough. However, the Fed appears to be more focused on forward looking signals like US policy decisions, economic forecasts, and consumer and business sentiment. Second, Powell specifically called out tariffs will lead to inflation. While recent data hasn't shown much yet, Powell noted that tariffs inflation usually isn't instantaneous, but as businesses work through the policies and they work through their existing inventory. However, he stressed tariffs do cause inflation as someone has to pay for them. He noted that a one time step up would be manageable, but tariffs could also lead to more persistent inflation as well. Finally, third, Powell continues to reiterate that the Fed has time to wait and see. In the Fed's view, the economy remains healthy with low employment and stabilizing inflation. They feel they still have time to continue to wait out the uncertainty before moving on rates. So basically, markets didn't get the rate cut signals they were hoping for. The next meeting is at the end of July with already a small rate cut odds anyways, but likely shrinking further. As of the start of the day, pre-meeting, odds for a September cut was about a two-thirds chance, but we'd expect that to shrink as well. Overall, we didn't come away that surprised with Powell's cautious message. As he repeatedly noted, there's a lot of economic uncertainty still, but the economy has still remained resilient. The Fed believes they can afford to wait, and for now, that's what they're going to do. In the meantime, we're going to continue to monitor the macro data as well.